It's about that time of day again here, folks. Welcome back. Welcome back. Joseph James here. School of Trade. I got Marty Erico from Traders Audio, and we're going to be doing our very unique morning prep from the screen to the floor. I'm in Los Angeles. I've got my charts opened up this morning. I'm a technical analyst. I've been doing it over 10 years now from schooloftrade.com, and Marty Erico has his feet on the ground on the NYMEX exchange. We're going to go from Los Angeles all the way to New York City. I'm going to start with a technical analysis, a top-down approach. We'll begin with much slower anchor charts, move all the way down, and I'm going to help you analyze London's trading session. London's trading session has a lot of big clues hidden inside of it, and we're going to be looking at that today so I can try to anticipate direction at the open. I'm looking for high percentage trading opportunities this morning, guys, between 8 o'clock and 9 o'clock using this overnight session. Right, and of course, I'm excited to hear from Marty this morning and see what he's seeing down on the floor of the NYMEX. So let's get started right away here. Let's jump right into some charts. I'm going to first begin with a 4-hour chart of crude oil futures, and we're going to begin by looking at, again, this top-down approach and take a look at what we see. First of all, my 4-hour chart. Very, very big clues in this 4-hour chart. One of the first things we notice is we are now nestled right into that sell zone at 94.79. Of course, unless you've been living under a rock the past 2 weeks, we've seen this massive move down, right? This bounce back up. And now, of course, here we are sitting here, potential double top. But most importantly, this sell zone at 94.79. We all know the 4-hour chart. Very, very wise. There's a lot of wisdom in this chart. This is a great mixture of a slow anchor chart and an intraday, like a 5, 10, or 15-minute chart. This is kind of blending them together. What you want to be aware of is these two levels are very important today. 94.79, 95.12. These two levels, very, very important. I say that because if this 4-hour candle, which we can see has about 25 minutes left until it closes. This 4-hour candle, if it closes below that 94.79, we know that buyers now have pushed up into a supply zone. Supply enters the market, and now price will gravitate lower. Now, I have to put a disclaimer on this stuff this morning because we're about to walk into non-farm payrolls in about 1 hour's time. So you have to remember that non-farm payrolls can take this chart, shake it around like an Etch-a-Sketch, right, or one of those snow globes, and we could be right back to square one, replanning all these levels here at about 8:45 this morning. So I do want to remind you guys, we are walking into the lion's den this morning with non-farm payrolls. Assuming these levels all stick, though, assuming by the time we get to 8:45 this morning, we're not looking like this, right? As long as this level is still intact, we know that a close below 94.79 will be bearish. A close above 95.12 will be bullish. Now, in the short term, really all I need is a 5-minute candle. Okay, I'm going to go over that VIP chart in a second. I just need a 5-minute candle that will close above that 95.12. When I get that 5-minute candle closing above 95.12, I'm getting long up to 97.01. Same thing is true for the 94.79. If we see this candlestick end up with a wick at the top, right, big shadow at the top, big fat bottom, we know we're going to be bearish and we will be heading lower. I'm specifically going to be looking for bearish candlesticks on 5-minute charts that will allow me to use this 4-hour chart to trade with. If I'm getting long, my targets are 97. If I'm getting short, my target is 92. If you really want to be a hero today, final target runner 90.33. And today being non-farm payroll day, a $3 move really ain't that much. So we know that 90.33 may be in the cards. If you get an extra bullet in the gun, don't be afraid to use that 90.33. The conservative target here, though, will be 92.18 on the way down. So 92.18 below us, 97 even above us. That's the 4-hour chart. That's going to tell us where the best moves are going to occur today. But now let's see what we have to work with that's going to stand in our way to get to that 97, to get down to that 92.18. Let's keep going. Next up, I'm going to grab a 60-minute chart. My 60-minute chart, really important. Now this starts to show me a lot more detail about what we saw from the 4 hours. Remember how we said that 94.74? Well, now we can see on the 60-minute chart, we can see a little bit more of a supply zone at 94.53. This actually is a huge clue. Look at the clue we see here on the 60-minute. I want you to focus your attention on these two candlesticks. Candlestick number 1, the close is just below that 94.53, right? Maybe you thought I was just making these supply zones up, but that is a little bit too close for coincidence. So you can see the close of that candlestick below the 53. And now you can see the second candle here, this very little, not quite a doji, but boy, it might be. You can see big wicks on both up and down. And of course, right now, we've got this candlestick closing below 94.53 as well. This now tells us that the 4-hour chart, which remember, all we saw on the 4-hour was this little wick to the top of that candle, right? All we see to this 4-hour candle is the wick. So that a little bit tough to tell. But we take a look at the 60-minute chart now, and now we can see here we're ripe for reversal. Again, disclaimer, ahead of non-farm payrolls, everything's going to be a little bit oddball before non-farm payrolls. Remember, people do the darndest things at the end of the month, at the end of the quarter, before FOMC, before non-farm payrolls. These are certain times of the month, certain times of the year that we know that traders do a little bit impulsive trading actions. So bottom line is 60-minute chart. This one tells me now we are right on track here for the reversal. We can still see that 95.15, close above the 15s. We're buying pullbacks. That's the 95.15. We already identified 97 overhead was going to be our target. Okay, so it's a big move up, big wide open space above us. Now looking at the 60-minute chart though, look what we have here. Now we have potential for a sideways range. 93.60 is a very short-term demand zone. It's a buy zone. So for all you scalpers out there, if you want to look for a short-term target, 93.60 will be it. But in all reality, guys, I think if we head lower, I don't think this thing's going to stop. I would use that 92.40. I would use that 90.74. We reference 90.33 on the 4-hour chart. So again, if we get this candlestick to close here, if we get that close below 94.53, I'm then using my 5-minute chart to plan my entry, looking for bearish entry signals on the 5-minute chart. Once again, scalpers, you can take your profit when you're short at 93.60. A close of a 5-minute candlestick now below that 93.60 area, right? That will get me back in short down to the 92.40. A candlestick close below 91.86, that will get me short down to 90.74. All right, pretty simple stuff so far. Again, don't forget we got non-farm payrolls to worry about here, and this may all change here very, very quickly. Another big clue here now in the 30-minute chart. The 30-minute chart really kind of mimics exactly what the 60-minute just told us. We can see we do have some short-term demand zones on the way down. In all reality, guys, I'm going to use the 60-minute chart, those levels off the 60-minute, the 30-minute, going to throw in this 93.05, 92.85. These are all buy zones in which our short-term traders can be looking to take profit. Once again, we can see here on the 30-minute, we also confirm same thing. Got to close above 95.15, and we're going up to 97 even. We can see here now another supply zone, 94.46, and you can tell big wicks to these candles. This looks like we're getting ready to get short here down to 93.60. Now we know our levels. Now we know what we need to see to get long. Now we know what we need to see to get short. We'll then play these levels on the way down. Remember, my strategy for managing my trade, strategy for managing our trades, guys, on the way down is I'm not going to simply put my target at 93.60. I'm going to wait and see what happens. If it consolidates, I'll wait. If it bounces back up, trail that stop right down and lock it out. If it keeps moving lower, I'm staying in that trade down to 93.05. So as we go down to new buy zones, I wait. If it bounces, I take profit. If it goes right through, I'm holding on for dear life. You know this is crude oil we're talking about here today. Last but not least, let's talk about the VIP chart. This is one of the most important charts that I'm going to use all day long today. This is a 5-minute chart. I call this the VIP chart. Stands for very important price levels. And ultimately what we're seeing here is, first, big clue here is London. London's trading range meets the criteria for a price reversal. We will expect, just like we did yesterday, just like we did the day before, we will expect price to pull back at least to that 94.12. What I'll be doing is entering short down to 94.12, 50% target there, half target there, hold that runner down to London lows. A nice, easy two-contract trade. A nice, easy two-contract trade. Okay, not a lot of margin needed for it, not a lot of risk needed for it. The risk reward on these trades are very, very good. Stop loss goes above the reversal zone. Target goes at the lows. You're going to get that 2-to-1, right? Reward to risk. I get short here with the bounce off the highs. One target off at the trigger zone support. Second target off is the runner. Yesterday morning, all we got was the test, and then we went. So yesterday, we got taken out at the London 272, got back in long, and you know what happened yesterday afternoon. It was all upside the rest of the day yesterday afternoon. So my plan today is I am bearish in the very short term. I am bearish now down to this trigger zone. So selling short down to 94.12. I'll take a partial profit target there, and I will hold a runner down to the London lows. At the London lows, I will look to, of course, once again, price reversal. I'll buy it right back up, and we'll keep going inside of this range. Another scenario is if price is to break out, this red box up top here, this is the bearish reversal zone. A close above that 94.95, I am bullish, folks. 94.95, I am buying. But if we head up into that reversal zone and we collapse back down in, you know where I'm going. I'm looking for that short. Stop loss goes above, target goes below. Very good risk-reward ratio and a very consistent trading opportunity that we see at least once every morning. Same thing will apply to the downside. If price happens to make it all the way down to the lows, again, I'm looking for a reversal zone below the London session lows. We'll go right back up. Again, very good risk-reward ratio. Stop loss goes below 272. Target goes back to London highs. You can see that's a trade worthy of taking. So as we wrap up my screen analysis this morning, I'm here on my charts here this morning. I'm about to pass it over to Marty Errico. He's in the pit on the NYMEX exchange. I am bearish in the short term. We've talked about 95.15, 95.15 being the close level that we needed on the 4-hour chart. I don't think you're going to need it, guys. That 94.95, 94.95 is all you're going to need here today. If these bulls are in charge, I'm looking for this 5-minute candle to close above that 94.95 so I can get long. And as we talked about before, we're already pushing out of that sell zone off the 30-minute, off the 60-minute, off the 4-hour. We already know this is a brick wall of resistance. So in all reality, a close above 94.95, we are buying here today. I am short right now. I am bearish right now. At the very minimum, down to that London 272, the London lows. Again, by the time we get down to those lows, we should be just about ready for non-farm payrolls, and you know what's going to happen then. Anything goes. I want to remind you guys one important thing about non-farm payrolls. We must be patient after that news comes out. We've all heard the terminology before. We've all heard this saying before. The market has priced in the news. Everybody heard that before? What do they mean when they say the market has already priced in the news? Well, if you're a major money manager, if you're an asset manager, if you are a dealer, as Marty calls it, if you're a paper trader, as Marty will refer to it in the broadcast, if you've got a couple $100 million in your disposal, you've already paid your analyst teams to do the research for this non-farm payroll report. So think about what the big money has already done this week. On Monday morning, there was a draft on your desk from your analyst team telling you exactly what to be doing. And sure enough, as human beings, we manifest that by placing trades subconsciously, by the way, right? Most human beings do not do this consciously. But what happens is when, and again, you can see this price moving lower. You can see this price moving lower. 94.12 is my target on this short. Subconsciously, what's going to happen is traders, money managers, anybody who has researched this report is going to now subconsciously trade in that direction. And that means that the news is ultimately already being anticipated in the current price right now. What does that mean? That means that if the news comes out today at 8:30 and it comes out as expected, you're going to see some slop and chop while traders decide what they want to do next. If the news comes out within expectations, we need to be very careful not to force trades because it's going to be sleepy. Now, the opposite side of that coin is that if this news comes out unexpected, if it catches everybody off guard, it's going to be mayhem. In fact, this is one of the most violently volatile times you can see besides FOMC Day, which we just saw earlier on this week as well. So remember, if the news comes out as expected, be patient to wait for the new trend. What's going to happen is on non-farm payrolls, you're going to see this price go berserk, and then it's going to start to find its trend. Okay, once it finds its trend after 8:30 news comes out, it's going to be about 8:45. By 8:45, we will know what our long-term trend is going to be, and now my job is to trade with that. Do not try to predict, guys. Do not try and predict. That's how professionals make that easy money off these news. So we're not trying to predict at 8:30. We're being patient at 8:30. If the news catches us off guard, we got to wait for that new trend to develop. If the news is as expected, don't be surprised if this thing just falls asleep. It'll take 15, 20 minutes before the big money starts to find a direction, and then we trade with the direction. Once again, my name is Joseph. I'm from School of Trade, and I'm here in Los Angeles in a comfortable chair, in a nice comfortable office. I always feel so bad for Marty braving the elements down there in the NYMEX exchange, but you know what? That's all right. Very unique, and this is a priceless approach here now. Now let's see if Marty can confirm what we've already discussed after looking at our charts. Marty, sorry to keep you waiting out there, buddy. Take it from here, my friend.
No problem. Good morning to you. Good morning to you, ladies and gentlemen. Alrighty, so I stand all day, by the way. Thank you for that. All right, so let's take
good
a quick
for you.
look.
That's good for you.
I guess so. Alrighty, let's take a look here across the board. First and foremost, we do see prices trading higher at the moment. Of course, in the overnight session, we have reached some important levels, but we have some that we need to open above to continue just on a bullish standpoint. But first, let's just take a quick look at some consensus numbers here. Now, I have consensus here for the number 153,000, and we're looking for the rate at 7.6%. Other than that, we have all those other pieces of, the private payroll, the average hourly earnings. We have the average work week. But really, we're looking for the number 153,000. That's consensus analyst expectations, and we're also looking for that rate, 7.6%. Now, we will dig into the rest of the number when we get it. As expected, as JJ said, if this comes in line with expectations, this could get a little ugly. I mean, if it comes in under expectation, it could get a little ugly. When it comes in line, we could just see, we have to be patient. We have to see what kind of reaction we do get. Now, alrighty, guys, crude trading 94.30. Again, we had a nice run up to the upside yesterday. And first, let's just take a look at risk-on, risk-off sentiment, as always the case here. Risk-on, risk-off sentiment is telling us just a couple things here this morning. As I look at this dollar index here, we see the big run that it had yesterday in the last couple days. Now the DXY just trading a little bit lower off of its high prints as crude's trading higher. Right now, the DXY dollar index is a little indecisive at the moment here. We look at your other currencies to try to give us any type of indication, and we see, most importantly, as I just mentioned, your DXY down about, we'll call about 40 points or so here, talking 82.13.5. Euro up above 131, which is promising, always the case here, up 44 ticks. And your Canadian down 35 ticks, 98.79, below the 99 even. So our risk-on, risk-off sentiment, risk-on sentiment here so far today, before the numbers here. After the numbers, we'll have to see in our broadcast what's happening. Bonds trading even, 149.06, they're unchanged, they're unched. Now, RBOB, heating oil, let's move on to our multiple market divergence here. We see a little bit of a turnaround. Now, we have to breach some major levels, and the thing is we need an open above the 94.70 level for us to be bullish. We also need to break above 95 even, the most important level of all. Again, we really, really need that open above that 94.70 to be bullish. Again, we need to get above 94.82, that 94.95, and the 95 even. Most importantly is 95 even without a shadow in my mind. Now, what I'm seeing right now, a little bit of interest in the 94 call. but that resistance above at the 95 put. Again, we saw a lot of interest here in that 95 put the last couple days and even into yesterday. 95 put was being heavily bought in the pit, over 4,000 times. But without a doubt, trade of the day here, 91 call. 91.5 call was our big trade of the day yesterday. They spreaded it out just by not just buying the outright 91.5 call, which we rose in, and then also we saw the call spread come into play, 91 to 94 half, 91 to 95 even. So there you go. Again, that resistance at 94 half, 95 even. If we break above it, this will be very promising. Like I mentioned here, we could get higher up to the 97. But if we don't here get above that and we just end up sitting around and we don't get above it, then we'll be selling back into the bottom of the range. So our RBOB, what is that telling us? Well, we have to get above here the 280.95 here in the RBOB. Right now we're oh, nope. Yeah, 280.95 here in the RBOB. We're trading 278.30 right now. 278.30. We need to get above 280.95. So RBOB starting to fade off its highs from the overnight session. Heating oil, same story here. We need to get above 288.43 as we fade off the highs. We're 286.70 right now. As we mentioned, dollar just trading a little bit lower here into the morning session as we are looking now at our internals here. We're going to take a quick look at volatility. Vol has been getting offered out very soft in the last couple of days on vol. As I mentioned, there's higher volatility in the strike levels below us, lower volatility in the strike levels above us. So right now we see vol fading off its highs, just softening up just a bit here, right, from yesterday's trade. We trade higher. Right now, implied volatility 25% here. Again, so 25% in the vol index. We're at 25.25%. So you can see vol starting to firm up just a bit. Again, we were down by, let's see what I had the closing vol at. Yeah, about 24.5%, 25%. So we're pretty much just for today. We were talking about yesterday. Just for today, we're even skew on vol. So we're going to have to pay attention to vol. There's actually a lot of delta involved with these strike levels of 94.5 to 95 even to 94 even. Right, and when delta's involved, and we have a very, very substantial amount of delta, 70–80% in the market, they're buying the idea of movement. They're not putting their money right now in a particular strike level, and they're not putting their money in the 95 level. They're saying, okay, we have to get up to here. They're just buying the idea of movement. They don't care if it's up, if it's down. They know there's going to be movement associated with the trade. They're buying the idea of movement in the delta. Looking at our options again, the big, as I mentioned, the big trades, 91.5 call. We also saw the that 95 put interested today, but a lot of interest in that 94 call here on the screen before our pit session opens. So we will keep an eye on what numbers tend to be. We also look here, ladies and gentlemen, at your open interest here this morning. Open interest currently stands 290,103 this morning. Again, that's 290,103, lower from yesterday's number. And that's telling you kind of that there's not too many shorts in this market, a lot of position balancing here before numbers, so there's not a lot of shorts right now in this market. Not the case here for the heating oil and RBOB. Right now I'm looking at your RBOB open at just 96,650, which is a little bit higher than yesterday's, and we're also looking at your heating oil June contract, of course, here. Open interest currently stands 105,107, a little bit higher than yesterday by about 2,000 and about 1,000 higher in the RBOB. So again, they're looking to get their shorts in the RBOB and heating oil. Crude, they're just playing it to see what the number is because we'll get the biggest reaction probably out of the crude. Alrighty, guys, pit session levels real quickly, then we're going to wrap this one on up. Oh, first, let's just take a look. Also, just talking about Brent crude here. We have 103.41 trading. The Brent's trading about 50 cents higher. Again, Brent here not holding levels above 103.5. If we can get above 103.5, that's like crude trading up above the 94.5 into 95. So we don't have that. We're fading off that high, as you can see. Brent WTI spread widening up. Again, this is promising here for fading these highs and shorting here right now. We have that Brent WTI spread at 9.15. Calendar spreads widening up. 25 cents into June, July. We're looking at June to Augie trades about 12 cents. And this is the kicker here. The June to Sep, 17 cents even, not negative even. Again, we're talking about an 17 cents. Again, the rest of them have an inverse. So, as we mentioned, now we're going to take a quick look at some pit session levels, and then what we're going to do is we're going to wrap it up and wait on for this number here. We have pit session high from yesterday, 94.10, which we are trading above right now. We also, ladies and gentlemen, have a low at 91.26 yesterday. Again, that's where we kind of opened up the day around that 91.26, and then we saw those calls come in, and then market was bid. So we were called about $2.50 higher. The settle number was 94 even. We had a range of about $2.85. And now we are watching here our daily pivot today, 93.12. 93.12 is your daily pivot. Resistance above 94.98. Again, 94.98. That's our first level here. If we can get above that, then we're good. Other than that, we'll be fading. So again, 94.98. We have 95.96 and 98.80. It's resistance above. Support down below. I got 90.25, 89.44. Oh, sorry, 92.14, 90.25, and then 89.44 for your last level. So real quickly, ladies and gentlemen, let's just take a quick look at the natty gas here. Again, natural gas here has been and continued to be off on the day. Big build in inventories yesterday. Well, not big, but double what they were expecting here for the expectation. So again, we come in 43, we get a big build. We see prices trading really rapidly lower, and it was very, very, very impressive yesterday with that huge move to the downside, almost 40 cents, which is huge in natural gas. So we can expect just a bit of a probably buying off the lows. We'll buy that dip again, huge dip in natural gas, so you kind of almost just have a decision to buy. Alrighty, guys, high yesterday 435.30, low 401.70. We closed and settled 403.30. We had a net change of 32 cents lower and a range of about 40.5 cents. Today your daily pivot is 413.40. Volatility right now about 34-35% higher vol. Open interest 220,977. Shorts are out below 300,000. Alrighty, guys, so I got your daily pivot as I mentioned at 413.40. Levels of resistance above. I got 425.1, 447 even, and 480.60. Support down below, ladies and gentlemen, 391.5, 378 even, and 346.20. Again, so we're just looking probably to buy these lows. But if we get below $4 in the natural gas, we are going to be looking here to at least get down to 393. So again, if we get below 4, we'll get down to 393. If we can maintain this bid here, open up above the 405, we can probably see us get up to 409. There will be some decent volatility, but the number will have nothing to do with the natural gas this morning. And that's really about it, ladies and gentlemen. Again, on a quick here, Friday morning here, Friday, talking non-farm payroll. Again, we're going to be looking for that 153,000. 7.6% is what analysts are expecting. We have just under 30 minutes till the number. So alrighty, guys, I'm going to hand it back over to JJ here, and we are going to be waiting here for numbers to come out. Again, I'm thanking you guys today to talk in just about an hour here.
All right, Marty, thank you so much for your analysis. As always, a very unique way to look at it. We went from the screen to the floor. My name is Joseph James. I'm from School of Trade. I run a trade room with all of our members every morning at 8 a.m. Eastern Time. That was Marty from Traders Audio. Marty has a broadcast live from the NYMEX Exchange. He starts up at 8:50 a.m., 10 minutes before the opening bell, and goes all the way until the closing bell at 2:30 p.m., covering crude oil and natural gas futures with his team in the pit. As always, we wrap up a week here. It's been a great week, our first official week of this broadcast. I want to thank you all for being a part of it this morning. I encourage you guys to leave feedback for us. Send us your feedback. We want to make sure this broadcast gets better every single day. And as always, we're here every morning from 7:30 a.m. until 8 a.m., giving you a very unique look from the screen to the floor. We've talked about the levels today. I'm going to be posting all of our charts on the blog here in just a moment. And as always, thanks for watching, thanks for listening, and we'll see you guys on Monday. Be careful out there with non-farm payroll news this morning. Remember, this is that Friday your mom warned you about when you were a kid, right? Be patient after that news is released and find that trend and trade with it. We'll catch you guys on Monday. Remember, folks, you got to learn it so you can earn it. Adios, amigos. Bye-bye for now.